Tuesday, January 22nd, 2019, Monaco 64, home of alternative economics and contrarian views. This morning I want to talk about a man called John Exter and the inverted asset pyramid that he devised and what it has to do with credit and the financial markets and the monetary system. I think credit is a very important factor, especially in a fiat money system that we've been undergoing. So I'm going to look at John Exter, his inverted pyramid, what it means. I'm going to look at the Dow-Gold ratio and how the fiat money system in the last 100 years has accentuated the moves, made it more volatile, and how credit is key and how credit determines cycles. And how we can see from the Dow-Gold ratio and the amount of debt there is in the system that things will turn. The only thing we can't predict is exactly when, but we can predict that it will turn because credit is a psychological thing. So before that, of course, I'm going to quickly go through where the markets are this morning. It's just before 8:15 a.m. London. So let's have a look at what we're doing here. We've got spot gold up $3 at 1283.36, excuse me. The low's been 1277.30 and the high is 1284. So we're near the highs, 1280 level. I think it's a key support. It looks like it's trading back above that level. In early videos, I talked about how the 1280 and 1300 levels were key levels, that if we broke through either level, we could see big moves either way. At the moment, it looks like we still could go further down in the price of gold. Have to be prepared for that. It doesn't change the fact that gold is still insurance against long term. Spot silver is up 3 at 1530. The range has been 1517 to 1533. Technically, the silver hasn't been able to break through a key trend line coming from the last few years. We've been able to break through there a few weeks ago, but it's come back below it. But we're not too far away from it. Silver could move up very quickly if things improve the sentiment. The stock market right now, the Dow future is down 82, 24,550, down a third. S&P is down 0.4, 2653. The NASDAQ 100 future is down 0.4 as well at 6426. Cable or sterling down 0.16% at 128.70. The euro is at 113.59, virtually unchanged from yesterday's close. Dollar is down 0.25% against the yen at 109.38, and the dollar's up against the Chinese yuan 0.25% at 681.50. WTI crude is down 1% at 53.67, down 50 cents. The 10-year yield is down 4 basis points at 275. What about the yield curve? Well, we've got the 1-year T-bill at 260, the 5-year at 2.589. So it is inverted from 1 to 5, but not from 1 to 7 as it was a few weeks ago. The 7-year yield is at 266. So the curve has disinverted, which can't read too much into it, but technically it would mean that people are a little more comfortable with the economy, but not much there, I would say. So before I go on to John Exter, his pyramid, and the Dow-Gold ratio, just wanted to tell people that if you want to support the channel and my message of abolishing central banks, I know it's a lofty goal, probably very difficult to attain, but you never know. Make sure you, if you're interested, buy one of these End of Fed mugs. It says robbing Americans since 1913. I've got Monaco 64 here, and then Home of Alternative Economics and Contrarian Views. It's all down in the description if you're interested in buying a mug. We've got some Billy mugs as well, and some other mugs and other merchandise there. So John Exter, I've read about John Exter I came across him many years ago, way before 2007, when I started looking really into the monetary system around 2002 and 3. And he's a very interesting character because he was a central banker. But can you say he was an honest central banker? Is there such a thing? I guess to some extent. I think he wanted to keep... I think he was a free market guy. And he wanted to allow the market really to decide interest rates and asset prices. And he saw that it wasn't possible. There's always someone in a dishonest system that is actually quite honest and realizes the fraudulent nature of this system. And I think John Exter was one of these guys. So I'll read a little bit about him. John Exter, he was, elite, but you can learn from these guys. John Exter was an American economist, member of the Board of Governors of the United States Federal Reserve System, and founder of the Central Bank of Sri Lanka. Yes, he did, I think after World War II, he was hired to help create the Ceylon, it was called at the time, central bank. He's also known for creating Exter's Pyramid. So let's read a little bit about his history. He was born in 1910, graduated from the College of Worcester. Well, that's in Ohio, I think. I remember I had a very good client from the States, and he went to that college. So that's quite interesting. So he graduated from College of Worcester in 1928 to 32. Then he went to the Fletcher School of Law and Diplomacy in 1939, to Harvard University for graduate work in economics because of his interest in understanding the causes of the Great Depression. So that's his background. It says here he had a stint at MIT during World War II. Exter joined the Board of Governors of the Federal Reserve System as an economist. In 1948, he served first as advisor to the Secretary of Finance of the Philippines, and then to the Minister of Finance of Ceylon, now Sri Lanka, on the establishment of central banks. Between 1950 and 53, Exter was the founder governor of the Central Bank of Ceylon, or Sri Lanka. In 1953, he became the division chief for the Middle East at the International Bank for Reconstruction and Development. It's the IBRD. It's one of these, banks that was developed through the Bretton Woods Agreement, World Bank, IBRD, IMF. So he was part of the cabal, the elite. In 1954, the Federal Reserve Bank of New York appointed him vice president in charge of international banking and precious metals operation. And then he left New York Fed in 1959 and joined First National City Bank, which became Citigroup, eventually Citibank. And I think he retired in the 60s. And he was a good friend of Paul Volcker, who I think worked with him. Probably they met at the New York Fed or at Citibank. I think maybe Paul Volcker did work there. Don't remember, but and I've read a lot of stuff about John Exter and what he did in the 60s. He knew after he left the Fed that the United States Treasury, the government, was inflating the system. They were printing too much money. They didn't have enough gold. So he was buying gold. And he bought gold in the 60s and 70s. And how did he buy gold if it was banned in the U.S.? Well, there are coins that you could buy. I think gold sovereigns were considered to be you were able to buy them in the States. So there's always ways around these things, and the people in charge know this. So the point I want to make is this is a guy who was, Federal Reserve. He worked to create central banks. Why? And here he is, knowing that the system has been inflated, and he's protecting himself, buying gold. I think he also bought a lot of mining stocks, and I guess he did very well eventually in 1980. And there's an interesting story about John Exter, because when the U.S. administration was meeting at Camp David, before that fateful day in August 1971, August 15th, when Nixon closed the gold window, Paul Volcker was Undersecretary of the Treasury, and he asked John Exter, I've read this years ago, he asked John Exter, what should we do? We're losing all this gold. And John Exter said there's only two things you can do. You can either raise interest rates, or you can basically renege on your promise or close the gold window. Unfortunately, they did the latter. Why didn't they raise interest rates? Well, politically, politicians, as you can see, President Trump now, they never want to raise interest rates, do they? They never want higher interest rates. So they went along with closing the gold window. I'm not sure what John Exter really favored, but he gave his opinion on how to solve the problem of gold flowing out of the U.S. coffers. And that's what the U.S. administration did. Exter's pyramid, which I will come up with here. So basically his pyramid is gold is at the base of the credit system. And everything else is credit. So he's got derivatives, unfunded liabilities, non-monetary commodities, private business. So he differentiates between non-monetary commodities and normal commodities. Corporate and muni bonds, securitized debt, listed stocks, government bonds, treasury bills, then the paper money and the gold. And you could put gold and silver here as well. It doesn't have the derivatives, so yeah. Well, it has the. And you can see you have the derivatives at the top, the riskiest of them all, because it's so leveraged. So what happens when the credit cycle implodes? Well, all these assets or credit instruments above gold at the base, they deflate completely. And gold doesn't change. It's always there. And so even if the price of gold doesn't go down, it doesn't matter. The point is that gold survives. Gold and silver survive. Paper money, I guess you have to have it in your hands. That might survive as well. It depends. So there you have it. John Exter and the inverted pyramid. So now to credit. I think there's a lot of people who think that central banks and the bankers and governments can keep this bubble going, the credit. But people don't realize that credit is just faith in your counterparty. It comes from the Latin credere, which means to believe in. So historically, it never changes the cycles. People are confident in counterparties, so the credit bubble, credit cycle goes up. Then they lose confidence in each other, like they did in 2008, and the credit bubble bursts. And then they had to save everything, create even more credit to keep the credit going. And I would argue that now, the debt is even bigger, as we know, because to create these central bank balance sheet, assets, credit has to be created in the fiat money system. It's not like Bram Bernanke, Janet Yellen, or Jay Powell, or Mario Draghi are out in the Klondike digging for gold so they can have more credit in their coffers. No, they just create it out of thin air. And the problem is, as I'll show you here with the Dow Gold ratio, is that credit, as JP Morgan said, is, he said at the Peugeot hearings in 1912, he said, someone asked him what gold was, and he said, gold is simply money and everything else is credit. So gold is the base of Exter's inverted pyramid, and that's what he explained. And you can see that under a gold standard, of course, there are credit booms and busts, but they are limited by the amount of gold there is in the system. It's always difficult to create infinite amount of credit like we almost do now, because there is an anchor to the system. So you can see here that the credit cycles are not as pronounced as they have been since the creation of the Federal Reserve. You can see how the booms and busts are much bigger. And I would argue, if you look at this here, that the top of the credit cycle was around 2000 in terms of real money, and that we saw in 2000 when that that's been correcting. And even though we had a supposedly credit bubble in 2008 as well, against real money, actually it wasn't a credit bubble, which is strange. But and now we've had, since 2008, they've been able to resuscitate this, they've been able to keep this credit bubble alive, but in my opinion, it's far from over. I'm not here to predict the exact date, but what we can predict is that cycles, credit, are always around. Credit is a human emotion, really, as people lose confidence in other counterparties. That's what it's all about. It's the faith. You don't need faith to have faith in gold or silver, because gold and silver are always there. You can't expand your gold coin or your silver bar. They're real. But credit is, you need to trust your counterparty. And actually, I'll go to a comment by the JP Morgan about credit. And it's from this book, The House of Morgan, which I read many, many years ago. Maybe I should read it again. But on page 154, I think, and this is at the Peugeot hearings, he's answering questions by someone called Untermeyer in Congress. And let's see, Samuel Untermeyer, that's right. And he asks JP Morgan, is not commercial credit based primarily upon money or property? And Morgan answers, no, sir, the first thing is character. Untermeyer, before money or property? And Morgan answers, before money or anything else, money cannot buy it, because a man I do not trust could not get money from me on all the bonds of Christendom. So there you go. There's JP Morgan explaining that money and credit are different things. And you can't even buy credit with money because money is basically based on trust. So that's what I'm trying to say here. This credit cycle will implode again when trust is lost, and it will probably be at the very top, amongst the bankers, the Wall Street bankers, the European bankers, the City of London bankers, and then we will see Exter's pyramid. That's why it's important, in my opinion, to know what our perceived or our enemies think. Even though he was a central banker, he left quite a bit of a legacy in terms of how to explain this system. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet, share it far and wide, this video, if you enjoyed it, and you can also follow me on Steemit, DTube, and on Twitter. I wish you all a great day, and I'll talk to you later. Take care. Bye.